Good evening, students. Welcome to the live coaching classes organized by Board of Studies ICA. Today's evening, we are going to study on two important chapters. Chapter 8 of the CGST Act, the smallest chapter in the entire CGST Act, that is in relation to the topic called accounts and records under GST law. Also, we are going to discuss on the topic called payment of taxes under GST law. Examination, expect 3 marks question from this particular chapter, minimum 3 marks, right? So before we start, let me have a formal confirmation from some of you. Hope you're able to see the presentation and my audio is perfect. Once I have a confirmation from some of you, I'll go ahead. Yeah, thanks for the confirmation, Kaushiki. Great. Let's start for our today's topic. So today's topic, what I'll do, we have 3 hours, 6 to 9 p.m. 6 to 8:30, I'll spend across roughly 2.5 hours to make you understand on this topic called accounts and records under GST law. And also the topic payment of taxes, where we will discuss how the tax will be paid through electronic credit ledger, cash ledger. What is the purpose of electronic liability ledger? So I'll take you through to understand various ledgers maintained under GST law. And computation of interest when there is a delay in payment of tax, how the interest shall be calculated. Examination, this is one area which generally will be tested, how to calculate the interest. I'll take you one problem to make you understand conceptually how this works out. And in the process of input tax utilization, there are a few conditions like IGST, CGST, SGST. I'll make you understand what taxes have to be utilized and what chronology we have to utilize. Last but not the least, TDS and TCS provisions. Examiner's choice, whatever topics you are seeing on the slide, one of these topics will be picked up for 3 marks. So I'll make you understand what is a scenario where TDS provisions under section 51, TCS provisions under 52 will be covered. So let's begin our learning for today. So before we go ahead with the topic called accounts and records, I'll make you understand the basic importance of this topic. Whenever we talk about audit under GST, when we have to conduct similar to your income tax or maybe your tax audit, that's a statutory audit or internal audit, even under GST, we have to conduct an audit. Earlier, we used to have this GST 9 to be certified by a chartered accountant. But of late in 2021, this provision was amended where the audit by a professional has been set aside. Now let's look at the business. From a business point of view, I have 3 categories of business. One is manufacturer, one is a trader, another is a service provider. So this topic called accounts and records under GST has kept in mind when you audit for any of this business person, maybe from the department point of view, maybe as a professional for compliance audit you undertake. There is, by the way, something called due diligence. Due diligence when there is mergers and acquisition which happens. So compliance is under taxation, income tax, indirect tax. We also conduct a review of the books of accounts. That point in time, this chapter is going to guide you what needs to be taken care of. So when we talk about manufacturer and trader, the common point we have is inventory. So whenever there is a audit done, first and foremost, they would touch upon physical verification of inventory. Please let us know what is the stock available as per books vis-a-vis the stock available in physical. So if there is a variance between books and physical, this variance will be dealt for recovery under 73-74. There is a procedure of demand and recovery which Vignesh is going to take after this topic. This is a precedence to the topic called demand and recovery. So first, we will look at inventory from a manufacturer point of view. Then From a manufacturing point of view, production records. Whenever there is a production activity undertaken, under erstwhile Central Excess, we used to have something called daily stock account. Daily stock account. Something like that, even under GST law, the law expects the manufacturer to maintain production records. That means what is the opening stock, what is the inflow manufactured during the day, what is the sale happened during the day, and what is the closing balance at the end of the day. So item wise, whatever units we manufacture, we need to maintain these records. In addition to this, we have basic records called your details of tax, avail, and pay. So they would like to understand from where you are purchasing, what goods you have been buying, what manufacturing activity you have been doing, and what is the taxes you are paying. What is the valuation? They will try to understand what is the valuation you are trying to do. In the whole process, there is something called scrap, waste, or what I can say is production or consumption details. They will be interested to understand how are you maintaining your inventory. These are the basic expectation from manufacturer point of view. Trader point of view, other than inventory, not much you can expect. Services altogether, it is a different ball game where they try to understand what is your nature of business. Based on your nature of business, who are your customers? How are you identifying your place of supply for the services rendered? Also, they will understand what are the advances you receive in the course of your business, how you are dealing with your time of supply with respect to payment of taxes. Last but not the least, your availment of input tax credit, complaints under section 16, complaints under section 17. This is a broader macro view where we will study this particular chapter to understand what is expected from the GST audit point of view. Hope this is clear, students. Let me come back to my today's topic, that is accounting records to be maintained under chapter 7 of CGST rules. So whenever we talk about this books of accounts, rule 56 is the key rule which covers entire activity I have explained in the previous slide. So here they expect you to maintain inward and outward register. Precisely, this is nothing but your purchase and sales register. So when I say purchases, what all inwards are there on which you have availed ITC? What are the supplies on which you are supposed to pay your output tax? This is the first record they expect you to maintain. Then stock register. As I have explained in the previous slide, I'm a manufacturer, I'm a trader. Then I have to maintain the inventory. So in relation to inventory, your raw material, semi-finished goods, finished goods. These inventory, they expect you to maintain what is your opening stock, what is the purchases happened, what was the supply or consumption, and what is your closing stock. This is a basic expectation in relation to inventory. Accounts for advances. Now, as I was telling you, in relation to service sector, this advances comes more in relation to service sector. Example, you have say hotel industry. In case of hotel, you have pre-booking. So the guest, before even he takes the accommodation service, he does a prior booking. So all the cases wherever money is received in advances, I have to maintain the register. What amount was received, whether it's interest rate supply or interest rate supply, what is the rate of tax, when was the supply happened, to what extent the invoice was issued, and what is the advances pending for adjustment. So this advances is altogether a different gamut which needs to have a separate disclosure when you file your GSTR1. In GSTR1, that is a statement filed under section 37, you have table number 11 where detailed list of advances. I would show money from where it has come, money, how much was billed, money, how much was adjusted against the invoice, and money pending for adjustment by way of a billing. So these are the details which are expected in Rule 56 with relation to advances. Then tax details, that is the details of ITC and output tax. They expect you to maintain from where you have claimed ITC and what is your output tax. For that particular month, please give me a list of purchases on which you claim the input tax credit, and also to whom you have supplied the goods or services and what is the tax payable thereupon. Keep in mind, I have written in brackets, stock register not applicable for composition dealer. Similarly, when I talk about your tax details, that is your input tax, output tax, not to be maintained by a composition dealer. Moving further, vendor and customer details register. Now, this is something new, which is generally not anticipated in any law. So the GST law says that in the course of your business, whenever you're purchasing or whenever you're supplying, please maintain a master. Please maintain a master with address. This is like a database. Take example. Say if I have rendered services to Wipro. Now Wipro might be registered in 28 across India, all the states and union territories. Now when I render services to my customer, law expects me to keep a track of all the customers along with their addresses. Details of place of storage of goods. Now, this is one important topic. I would call this as an additional place of business. Additional place of business. In customs, there is one concept called warehouse. This is one of the fantastic provision. When I deal with customs provisions, I'll explain you in detail the advantages of this particular warehousing funda. Now, coming to the GST law, the rule is expecting, please furnish the details. Like when I take a registration, under GST law, at the time of registration, I have to mention something called principal place of business. That means where I'm carrying out my business activity, where I can be accessible or approachable, where all the communication has to be made in relation to my business activity. Principal place of business is a main place. This is my main place of business. In addition to this, I have something called additional place of business. Wherever I intend to carry out my business, in addition to principal place, I call additional place of business. So here they are asking, see, when you are stocking your goods, when you are storing your goods, please maintain the registers for this additional place of business. I'll give an example for you to easily remember this particular provision. Say I'm a wholesale dealer in electronic compliances, electronic gadgets or electronic appliances like television, refrigerator, washing machine, etc. So I have a showroom in door number 1. All my stock I cannot maintain in that particular shop number 1. Exactly backside of my shop, that may be door number 15. What I will do, I will stock all my inventory in door number 15. Whenever customer comes for purchasing a particular goods, I have only display items. So if a customer is interested in a particular television, I cannot remove the television which is there for display. What I will do, I'll go to the back store for the door number 15. I'll pick my material, come back and bill to the customer. Now here, my door number 1 will be called as principal place of business. My door number 15 will be called as additional place of business. So in the registration certificate, I have to show all those places where I have stored my goods. So what happens if I don't declare this particular additional place of business? Then law presumes that there is a deeming fiction. I would call that as a deemed supply. Deemed supply. Now, if you, I don't know how many of you have seen Tally. In Tally, we have something called main godown and subsidiary godown. Now, in Tally, we have various godown options. So when I move a material from main godown to the secondary godown, I do a stock journal entry. So this stock journal helps me to maintain physical stock in a particular godown vis-a-vis the stock available in my books of accounts. So one of the expectation is, in case if you are carrying out a business activity at a different place, please maintain the inventory of the goods at that particular additional place. Finally, production details, which I've started at the first of my slide, manufacturer. As a manufacturer, I have to keep a track for the goods which are manufactured on a daily basis. This is just an overview. When you talk about Rule 56, this is going to give you a broader view what is covered in this particular chapter called accounting records. Viraj is mentioning today's topic is important from day-to-day accounting point of view. This topic will give clarity while filing GST 1 and 3B. Absolutely correct. So this particular chapter is also going to help you in aiding filing your returns called GSTR 1 and GSTR 3B. So let's get on to learning this particular topic by topic from individual business point of view. As I take you through, I have given three business, that is manufacturer, trader, service provider. In addition to these three, there are some other business like godown or warehouse, job worker, or I would say works contractor. These are two additional line of business where the law gives a direction. What are the compliances with respect to books of accounts under the GST law? And students, you can see on left hand side, I have given you one image. This is a typical registration certificate if you look at under GST law. In this particular registration certificate, it may not be visible. I'll help you to understand this. There is something called principal place of business. This serial number 4 says principal place of business, where I'll be mentioning what is the address where I can be accessible, where I'm accessible. When you go to the next page, there you'll have additional place of business. So here, this registration certificate gives me my certificate is valid from which date to which date. And also in this certificate, I have a column where issuance of date of this certificate, issuance of date of certificate. So why is this date of certificate is relevant? For calculating my input tax credit, also for calculating my revised tax invoice under section 31, I look at my registration certificate. Now, important point to look at whenever you go for an audit under GST law, please look at the registration certificate to examine what is the principal place of business and what is additional place of business. When you have additional place of business, ask the client, sir, do you maintain inventory? If answer is yes, do you have the inventory maintained separately for each of your additional place of business? This is one of the important point you have to ask. So what if the assessee is a manufacturer? Let's take example of say Ashok Leyland. Ashok Leyland, maybe like in the state of Tamil Nadu, Ashok Leyland has got 3 units, unit 1, unit 2, unit 3. All the 3 units have one GST number. Then you will recommend declare 1 unit as principal place of business, declare the other 2 units as additional place of business. So what do we expect? What can I do from the audit? The next coming slides, we have to keep a track. What are the inventory? What are the production, manufacturing activity? What is the inventory maintained over there? And in addition to this, you have something called documents under GST law. What are the documents? Tax invoice, debit note, credit note, and a delivery challan. Please keep in mind, students, these are the documents we declare in table number 13 of GSTR1. Table number 13 of GSTR1. So are these things going to be tested in your examination? Absolutely not to worry. These are not going to be tested. I'm making things easy for you to understand. When we study these topics, where we are going to apply. Like Viraj has rightly pointed out, when we file our GSTR1, when we file our GSTR3B, These information is going to help you to understand for proper disclosure. Now, in simple terms, my section 35 mentions that every registered person has to maintain these 6 set of registers, whichever is applicable, production or manufacture. So if I'm a manufacturer, I have to maintain the details of production or manufacturing activity. Now, sir, how do we know when we visit for audit? When we visit, how do I know whether the assessee is a trader or manufacturer? Please examine. There is something called SIOM. This is as per foreign trade policy and customs, standard input-output norms. That means to say, what I buy, what I sell. What I buy, what I sell. Whatever I'm buying is the same as what I'm selling, then I do call as a trader. What I'm buying and what I'm selling, if there is a variation, I will call myself as a manufacturer. So if I'm a manufacturer, please provide the production or manufacturing details. Question comes here. Sir, is this manufacturing records to be updated daily basis, weekly basis, monthly basis? Answer, it has to be updated on daily basis. So answer for that, my records have to be updated on daily basis. Beginning of the day, what is opening stock? Manufacture, sale during the day, and this closing balance. Then moving on, inward and outward supplies of goods or services or both. Inward and outward supply of goods or services or both. Now, this point number B is data which is abstracted from my purchase register and sale register. Purchase register and sale register. So here they're expecting you to maintain from whom you are buying the goods and to whom you are selling the goods. So you remember there was one expectation, address, name of customers and the vendors. So this purchase register, sale register, we have to have a detailed data to provide that information. Point number C, stock of goods, that is your inventory. Accounting standard 2, whenever we do the finalization of books of accounts, we look at the closing stock. That point in time, we talk about your raw material, finished, semi-finished goods, or work in progress, finished goods, along with tools and spares. They wanted this inventory to be maintained as on a daily basis. Again, opening stock, purchase during the day, issue to the production, closing stock. Whenever there is an inspection, whenever there is an audit under section 65 or 66 or inspection under 67. These are the provisions which Vignesh is going to cover very short while. These are the provisions where the department officer comes for an audit or inspection. That point in time, these are the registers which the officer is going to ask. Section 35 is the origination which talks about these records. Moving on further, output tax, payable and paid. Output tax, payable and paid. They're asking, on the basis of your point number B, please tell me how much is the tax we have to pay. On the basis of your point number B, please let me know how much is the input tax credit you have taken. Now, these two are going to help us to file a written called GSTR 3B. GSTR 3B. So there is a sales which is going to be furnished in a written called GSTR 1. And we have a purchases which is going to get populated from GSTR 2B. GSTR 2B. Students who are not well versed with GST provisions, please keep in mind, this is my sales information, GSTR 1. GSTR 2B is my purchase related information. Combination of this 1 and 2B is going to come into a written called GSTR 3B. This is what you need to understand. Then such other particulars, rules have been formulated to make you understand what additional information has to be captured. Now, question comes here. So do we need to maintain this registers or records only at the principal place of business or additional place? Answer, every additional place you have to maintain these registers. And please keep in mind, whenever we do audit, we certify. the financials furnished or reported are true and correct to the best of my knowledge. Similarly, assessee, when he is maintaining the registers, it is expected that the records are true and correct with proper information. So can I maintain the registers electronically? Answer is yes. You can maintain manually or you can maintain in electronic format. Now, starting with, when we talk about this registers, section 35 gave a broader view. What is that I'm expected to maintain? Moving further, rule 56 gives a little more clarity or more complaints than section 35. First and foremost, details of goods imported, exported. Details of goods imported, goods exported. Now, little backdrop here. There is something called IEC, Import Export Code, which is issued by Department of DGFT, Department of General Foreign Trade, where every importer or every person who exports the goods or a service provider who's exporting the services and who's claiming a benefits under DGFT provisions is supposed to have something called IEC. IEC is like your PAN, which is a unique number. So IEC has a bearing when we talk about customs provisions. Customs provisions. So as per customs law, I need to have mandatorily IEC in relation to goods imported or goods exported. So the first and foremost expectation is please maintain the list of those goods which have been imported, those goods which have been exported. So why is it required? In GSTR 3B, ITC availed on imports. And in GSTR 1 and GSTR 3B, I call this as zero rated supply. When I say zero rated supply, there is no tax I pay at the time of export, at the time of supply. For that purpose, they are asking, please maintain the track for import and export. Next, supplies attracting tax on reverse charge. Payment of tax on reverse charge. Now, this payment of tax on reverse charge is little important where they ask or they expect, please keep a track what all services on which you have to pay your tax on reverse charge. I'll give little clarity over here. Let me just come to a blank screen. Payment of tax on RCM. Now, when I talk about payment of tax on RCM, please remember, I have to pay tax on RCM on goods, on services, on goods, on services. So how do I keep a track? How do I know, how to explain to the officer when I'm doing a complaints for this particular payment? For that, please look at your, assuming that this is your profit and loss account. This is my debit side of P&L. This is my credit side of P&L. All my expenses which are recorded in my debit side of P&L. This is one source where the department is going to verify. Like example, say there is an element called freight or legal expense. So when I book these transactions in my profit and loss account, this is one source where the officer is going to get to know where all you have to pay your taxes. Second source of information, you have something called notes to accounts. In notes to accounts, we give details of money earned in foreign currency and money spent in foreign currency. Now, this money spent in foreign currency, where I mention the details of import of goods, import of services. This is one area where the department will get to know where all you have incurred expenses on which you have to pay tax under reverse charge mechanism. In addition to this, there is a third source where this information will be looked upon, that is in your balance sheet. In your balance sheet, you have something called advance payments. Advance payments. So if there are any advance payments to your vendors, this advance payments is going to depict those goods and services on which tax needs to be paid on RCM. So students, these are the three sources where offices may know, may not know. For that reason, every month, they expect you to maintain a register for this either receipt of goods or services or advance payments. Advance payment. So is this okay? I would say, in addition to this, there is something called self-tax invoice. Self-tax invoice. Please issue or please prepare a document called self-tax invoice as per Rule 46. Now, what is the self-tax invoice? I'm going to mention what is the description of goods or services on which I'm going to pay tax under 9.3, that is notified list, or 9.4, that is in case of a builder. Now, every transaction on which I'm paying a tax, please maintain something called self-tax invoice. So why is this self-tax invoice required? If this is not it, what will happen? Please keep in mind, as per section 16, that is when I have to claim input tax credit, there is a rule which talks about, Rule 36, which talks about having a document for claiming the input tax credit. In relation to your unrelated, this reverse charge mechanism, I have to maintain a register where I'm liable to pay the tax. Also, I have to prepare a document called self-tax invoice. This is the compliance requirement in relation to reverse charge mechanism. So coming back, reverse charge mechanism, this is the expectation. Now, in the process of these documents, I have explained invoice, tax invoice, bill of supply. Now, tax invoice will be issued whenever there is a supply of taxable goods or services. Bill of supply will be used by a composition dealer or as a registered person when I do a exempt supply. Examination, 1 mark MCQ can be expected. Bill of supply will be issued in the case of supplies made by a composition dealer, supplies made by a registered person where the goods are exempted under the GST law, supply of goods which are taxable under GST law. A, B, C, D, none of the above. So if you have A and B combination, for A and B, I issue a document called bill of supply. Then moving on, third document called delivery challan. Delivery challan, I have given explanation in that last class in relation to job work, in relation to other than supply. I use a document called delivery challan. This is one of the important document which will be asked at the time of your GST audit. So for what purpose I have used a delivery challan and why a tax invoice was not used, why a delivery challan was used, will be a question asked by the department. So even you, when you take up this assignment of GST audit, please do the audit of the GST return. When you walk through the details furnished in the GSTR1, you will understand this information. Yeah. Then documents called credit note, debit note. Now, credit note, debit note, we have discussed in the last session. Section 34 deals with a credit note and a debit note. A credit note with GST, debit note with GST. Then we have something called receipt voucher. Receipt voucher will be issued when I receive my advance payment. Similarly, a refund voucher when there is a money refunded, when money is refunded without supply. In between, something called advance voucher. Payment voucher is where for reverse charge, for RCM, when I make an advance payment to my supplier, I issue a voucher called payment voucher. So this one slide is going to give you a macro view what all documents you have to call for when you do a due diligence. 1 minute, I'll explain you the importance other than examination. When you conduct audit under GST law, or when you have to undertake a due diligence in GST, you need not understand the entire business or go through all the returns. First and foremost, you can say, please give me the registers which are maintained, like section 35, what I have explained you. Ask the assessee to provide all the registers in soft copy. Once you examine those registers, that is going to give you a macroscopic view. What is the supply they are doing? What input tax credit they are availing? How that information is flowing into the returns called GSTR1, GSTR3B. So if you analyze, say, 30 minutes of all these particular details, you'll get a macro view, way to start, what to look, and what to ask. Even a person who doesn't know anything on GST, this slide will help you to have a better understanding. And keep in mind, these registers are not required to be maintained by a composition dealer. So what is the reason why composition person was exempted to maintain all this information? Reason, law is made to be simple for small, medium enterprises. So this MSME who are not well versed with the compliances, the tax rates are kept at very low and the compliance also have been kept at low. For that reason, these registers are not required to be maintained by a composition dealer person. Now, I was talking about inventory. So all inventory, opening balance, receipt, supply, there is something called goods lost, stolen, destroyed, written off. Vignesh sir has covered this provision when he was explaining section 17, which deals with your block credit. Like there is a proverb, when we want to test a particular particular transaction, you need not do 100% watching. Like you remember reverse this ASEAN, we have this risk control matrix. We will take sample from the population. One particular sample, I walk through from beginning till end to understand what all controls are there at each and every point. Based on the control weakness, I take few additional sample to see what could go wrong or what has gone wrong. Something like that is your compliance audit under GST. You need not do 100% watching. Just ask for this particular slide. You ask the assessee, please give your inventory details in this particular fashion. Way you have columnar data. What is your opening balance? The goods received during the day, goods supplied during the day, the goods which have been lost or stolen, goods which are disposed by way of a gift or sample, and balance closing stock. These two items is going to give you what is your block credit. And this has to match with your inward supply. That is your purchase register, where ITC has to be availed in your GSTR3B. This has to match with your outward supply, where my output tax will be paid in my return. Now, most of the time, your assessee, whether he is complying with the law 100% or there are any loopholes, this one particular data is going to reveal on its own. If you are very good in MS Excel, where you have this dashboards or data mining, etc., this one data is going to help you to do entire audit under GST law. Like I said earlier, audit under 65 by the GST department, audit under 66 by expert like a chartered accountant or cost accountant, or inspection under 67. Any of these audits, this data is the preliminary source for them to dig in to say whether there is a compliance or whether there is a non-compliance. This information has to be maintained for raw material, finished goods, scrap. And keep in mind, this data is not required to be maintained by a composition dealer. Reason? Very, very simple. Composition dealer just need to maintain what is his purchase, what he has sold, on the sale, what is the tax he needs to pay. That's all. He is not burdened with anything. No need to maintain inventory also. Next, in relation to service provider, I was talking about table number 11 in GSTR1, which talks about this information. Now, being a chartered accountant, I would say that most of you who is doing your internship in service sector, you and people who are from this professional background are the only people who can understand this particular complaints with respect to advances. When you look at your balance sheet, my advances will be shown as a current liability. Advances received will be shown as a current liability. In profit and loss account, I'll be showing something called billing. Also, there is something called current asset, which is your unbilled revenue. Current liability for advances. Now, this particular slide is asking for the information. This is asking for the information. Please ask the assessee. What do you ask? Please maintain an account for advances received. So the moment I receive advance, where do I account? Debit my bank account, credit my current liability. That is from the person who has paid money advance. So if I receive a lakh from my customer, I'll say 1 lakh is current liability, which is the money received in advance. In balance sheet notes, when I prepare my notes, I'll say my current liability. This is the amount of advances received from my customers. Generally, sundry data should have a debit balance, but this is done where sundry data is showing a liability. Now, so what if I have not maintained this advances in liability side, rather my receivable and advances are both netted off together? I would say you are going to have a tough time with respect to GST complaints. When you do an audit, please maintain a separate track. Whenever advance is received, don't club with the regular receivable account. Keep a separate account, because a reconciliation of this data with your returns, whenever there is an audit done by the department, you are going to spend a lot of time on this information. Say I have maintained a track for advances. Then what they want? Advances paid. Now this is the money I pay to my vendor. So why this information is being asked? Because if you remember section 12, section 13, which deals with your time of supply. In time of supply, there is a concept called reverse charge mechanism. Whenever I pay advance to my vendor, I need to pay tax under reverse charge mechanism. I'll give an example for you to understand. So there is a transporter. I have a consignment to be moved from, say, Chennai, Tamil Nadu, to one of my customer in Rajasthan. This transportation is going to cost me 1 lakh. My transporter says, so please pay me 50,000 advance, then I'm going to deliver the goods. So transporter, when he picks the material, I pay 50,000 advance. Say on 28th of February, I paid advance. On 5th of March, the consignment reached Rajasthan. So I'll pay balance 50,000 in the month of March. So what happens here? Under section 13, when I pay tax and advance, for the month of February, I have to pay tax on 50,000 for February. Balance 50,000 I'll pay for March. That reason, this register called advances payment is going to be looked upon. Then the next item called adjustments made thereto. For these two advances, which is going to appear as a current liability or current asset, when are you going to book your expense in relation to freight or expenses? When are you going to park this current liability as an income in your profit and loss account? Please keep a track for these advances. Students, I'm going to mention here. Once you get into the industry, if you have to handle the service industry, especially the tour operator, this is one line of operation where you have to have an expertise to keep a proper tracking for the purpose of GST compliance. And keep in mind, you will be paid well if you have a knowledge and expertise to handle how to deal this complaints, how to maintain my books of accounts. For that, I would recommend have a thorough knowledge on chart of accounts. So whenever you do your audit, first information you need to call for is, please give me your chart of accounts. Let me understand how you are maintaining your detailed books. This chart of accounts is going to give you a glimpse of this audit under GST. Next, moving on further. These are the documents, that is your tax invoice, credit note, debit note, delivery challan. This information is the key source for table number 13 of GSTR1, where invoice number, like I'll give an example. Say this is my month 1, this is my month number 2. In month number 1, I've used invoices from serial number 52 to say 65. In month 2, I have used serial number from 44 to 58. Now, is this a good compliance? Answer is definitely not. Reason, look at month number 1. In month number 1, when I filed my GSTR1, I have given information to the department saying that my supply started from invoice number 52 till invoice number 65. In month number 2, I started from an invoice number called 44 till 58. Now, what is happening here? There is no chronology. There is no sequential utilization of your invoices. So the department says there is some malified or there is something called fraud, suppression, or willful misstatement. Now, give importance, give attention. This chapter looks very, very silly or very, not unimportant chapter, but this is a chapter which is going to set the preamble for your audit under GST. Without even visiting the premises of your assessee or the client, sitting at your office, sitting at your desk, you can download the data of GSTR1, download the data of GSTR3B, get the financials, and look into all this information. Before you get into the field for the actual audit, this information is going to give you what happened with the business, whether this is proper or something is abnormal. Similarly, credit notes. Importance of credit notes. Reporting a credit note in the month of issuance. In the month of issuance. That is to say, the month in which you have issued a credit note, the same month you have to report or reflect in your GSTR1. Most of the cases, your year end, that is March, is the point in time where your adjustments takes place in the business, where increase of turnover or decrease of turnover. All the adjustments are done to this particular March. Please keep in mind, when you file your GSTR1, when you file your GSTR3B, this GSTR1 or 3B is going to have the invoice wise, or I would say the chronology of these documents. These documents is going to reveal, are you going to play around? Are you going to adjust documents after filing the returns for the month of March? So, all this information is going to be furnished to the GST department when you file your returns. Nothing can be tampered, nothing can be played around when you do adjustment in the books of accounts. This is the information which goes to the department electronically. Those maybe 5 years back, when we were doing manual excise or manual service tax returns, probably you have an opportunity to do some sort of adjustments, but these days everything is electronic. So you cannot tamper, you cannot play around with the data. This is one another expectation from your Rule 56. Let me see if there are any doubts before we go further. So far, so good. I'm making this very, very practical and easy, and also importance of this chapter from your practice point of view, I'm making as slow as possible. Next point. Details of supplier, details of your customer, vendor. This is your vendor, and address where the goods have been stored. Now, in case if there is any default, when I say default, defaulting payment of taxes. The department, the way this GST law is very, very stringent law. What does the law say? Look, I'm going to give you a benefit of input tax credit. I'm going to give you a benefit of input tax credit, provided this tax was paid by your supplier. So what if supplier defaults? Then the law says you have to reverse your input tax credit. So why is that law so stringent, so tough? Why is the onus is being placed on me as a buyer rather than on the supplier? Who asked you to buy from this supplier? Who identified this supplier? You believe that this supplier is a genuine supplier. So please expect your supplier to make good the taxes. Whenever you are taking the input tax credit, you have a liberty not to pay your supplier until he makes the payment of tax. So if the supplier is making the payment of tax, you make the payment to the supplier. So I have to pay advance. Then please take a bank guarantee. Please take a declaration from your supplier that whatever supplier is going to make is going to pay taxes. If he's not going to make the payment of tax, please take back the tax, what you have paid to him. This is the expectation. Then name and complete address of the persons to whom you have supplied. That is your customers. So they wanted to understand whether you have defaulted or your customers have defaulted. And they wanted to understand whether it's a genuine business or it is a bogus supply. So for that reason, they wanted to have this information. Also, additional place of business. Where all you have been conducting your business, please mention the premises where you are stocking the goods or you're maintaining the books. Storage of goods in transit. Now, there is a transporter who is storing the goods on the way. This I'm not bothered. It is a responsibility of the transporter. If I'm storing goods at my main place of business, those additional places of business also have to maintain a track. Now, I'll give an example how this particular provision is enabling to maintain something called additional place of business. Say, I have, let's assume that this is my inventory register. Inventory register. This is my debit side. This is my credit side. I'm just talking about only quantity, not with respect to value. On 1st January, I have received 30 units. 5th January, I have received 100 units. When I have received, like assuming on 2nd January, I have supplied 20 units. 4th January, I have supplied another 10 units. As on 5th January, if I have to close my books of accounts, 130 units I have received. 30 units is what I have supplied. So this gives me a closing stock of 100 units. In my main warehouse, I have physical stock. I have physical stock of say 20 units. In my godown, which is say 20 yards, I have maintained another 100 units. Now this godown is unofficial godown. That means to say, I have taken this as an additional place of business. I have not disclosed to the GST authorities. Assuming for a moment, section 67, there is an inspection by the officer. Now, there is a kahavat in Hindi, Bina bulaye mehman aa gaya. In Hindi, we say, Bina bulaye mehman aa gaya. That means to say, a guest has come whom we don't expect, who has come as an inspection to our business. So when this officer has come to the business, he says, please give me the inventory records. So I have given the printout of the inventory register. I'm very happy saying that, sir, I have closing stock of 130. And if the officer is going to ask me, I can very well show, sir, 20 units are here and 100 units are here. 100 plus 20. My closing stock is 100. Let me say in the go down, instead of 100, I'll say 80. 80. So I'm going to show to the officer, say 20 are there in main warehouse and 80 are there in this go down. I'm pretty happy. Physical stock is matching. So this officer says, in your registration certificate, you have declared only principal place of business. You have not disclosed additional place of business. This go down was not declared. So the officer is going to say, I deem that you have supplied these 80 units. Please pay tax on these 80 units. If the tax is not paid, they confiscate this particular stock. So importance of this additional place of business is whenever there is an audit, whenever there is an inspection, the provision says that the proper officer shall determine the amount of tax payable, or as if, look at the language, it's a deeming provision. Such goods have been supplied by the registered person. So the stock which is there in my additional place of business, that is go down, it is presumed that the supply took place and I'm supposed to pay tax on that particular additional place of business. So this is the importance of maintaining my registers where my go down wise, I have to maintain inventory. Not only that, this addresses should also be there in your registration certificate. This is the importance of this particular provision. Now, Rule 56 says that, look, you can maintain registers electronically. Also, you can maintain your registers manually. If you maintain manually, please maintain in a detailed fashion. Don't overwrite the registers. Maintain neat and clean records. Sir, if I maintain registers electronically, maintain a log for each of those inventory records. For a moment, I'll give you a little background. Whatever software you use for your bookkeeping, please ensure that this particular software has something called log. What is it log? Records edited, records modified or deleted. Now, most of us use Tally, SAP, ERP or QuickBooks or Zoho. Whichever accounting record you are using, please see whether I can delete a record. If I delete a record, whether there is a log available for that particular deletion. If I edit, whether there is a log on what date I made an entry, what date I have deleted an entry. This is an expectation as per Rule 56. Now, this is one slide where maintenance of records. I'll give an example before I come into this particular records. When we talk about management of a company, there is a person called director. It sounds very good when we say someone has been appointed as a director. But please keep in back of mind, Vignesh sir is going to take you in detail this penal provisions, consequences, person responsible in case of penal provisions. Any malfunction, any nuisance, any non-complaints, the key managerial person are going to be the responsible person for those complaints. Simple example. For a particular month, PF was not paid or PF was delayed in deposit. The officer in charge, so-called directors, who are all there on the board, shall be personally held responsible for that non-compliance. Similar to that, I come to this provision called records maintenance. As a chartered accountant in practice, as a professional, please maintain records at the registered place of business of the assessee. Don't maintain the registers records in a firm way you are running your office. Most of you, post-qualification, you will be interested to take up the practice where you will get the registers of the assessee, put a separate the record where you will say client 1, client 2, client 3. You will also offer a services where you will display the name board of clients. Please don't do that particular thing. Reason? Law says that wherever your documents are maintained, in addition to the main place of business, that shall be the place of business which will be considered as an additional place of business for inspection. For a moment, there is an inspection under section 67. Under section 67, there is an inspection which is visited by the officer. So when officer comes for audit, accountant says that, sir, my sale invoices are given to the auditor. Okay, please give the purchase invoices. Again, the accountant says, sir, the purchases for last 6 months is kept in the auditor's premises. So whenever there is an anti-evasion team who come for inspection, in addition to the client premises, your office also will be raided by the officer's consent. Now, whenever there is an inspection carried out, they don't inspect only your client's records, they inspect all other records available. For that reason, I would say, please don't maintain registers other than the place where you have taken a registration. If you maintain at any other place, there is a deeming fiction called presumption. They presume that all those other premises are said to be additional place of business for the said register person. This is the importance of your burden of proof. If you maintain registers at places other than where you are supposed to maintain. Next provision with respect to agency. Very simple. We have talked about this valuation where I gave an example of the cement dealer. If I have been appointed as a dealer on behalf of say Ultratech Cement, all the supplies which I take place as an agent, what is the complaints I have to do? Very simple. They say, please maintain the agreements where you have agreed upon to act as an agent. So first point, please maintain the register of agreements. Point number 2, please maintain a register where money has come to your account, money has gone from your account. That means what purchases you have done as a buyer, what sales you have done as a seller. All your purchases, all your sales. Please maintain a register. Give the register whenever audit is conducted. Then please disclose the list of principal on whose behalf you have carried out this activity of purchase and sale. Last but not the least, details of payment. How much tax you have paid, how much tax you have collected on behalf of principal. These are the details which were expected from an agent. Very simple to remember. Works contract. Now this is one of the peculiar combination where if I undertake a works contract, build up, whenever audit is conducted. Now I'll give you a simple example before I touch upon this particular. Let me take a white screen. As a builder, what is the complaints I have to do? What is the complaints I have to expect? Now, generally, it so happens that I have something called main warehouse. Then I have site number 1, site number 2, site number 3. Now, what happens here? I will maintain. Now, generally, as a builder, my main inventory will be cement, steel, and your bricks. In addition to that, you have some consumable items every site. So here, they expect the inventory, which was inflow of goods to the inventory, outflow of goods from inventory, in order. In on account of purchases, out on account of your transfer to site number 1, transfer to site number 2, transfer to site number 3. At each individual site, you have something called sub-stores. So the law is expecting that please maintain a registers how much inventory was received, how much was consumed for the site. This is received from the main house, and this is your consumption. Now, when I talk about consumption, out of the consumption, please indicate how much you have billed to your customer. This is a broad and macro view of expectation on maintenance of registers by a works contractor. I call as a works contractor. So this is a basic expectation from a works contractor point of view. Let me come back to the main theory. Now, they say name and address of the persons on behalf of you, that is your customer details. Please give me list of your customers. When I look at your balance sheet, now in your balance sheet, you have something called current liability, that is advances. All money received from your customers for each of the work undertaken. Then point number 2, purchases. Please indicate all the purchases you have done in a particular tax period. And this particular material, please indicate which all warehouses you have maintained. Then from there, each individual side, what is your consumption? How much is your purchase? From that, how much consumption happened? Further, for each of those consumption, please let me know whether the money was received against a bill or against advance. Now, there is something called stage-wise payments. So, law is expecting you to maintain a track. Please let me know what all stage-wise payments you have received. Is it against the work done, or is it against completion, or is it against an advance? Last but not the least, your list of suppliers who have supplied the goods. Why? Because they wanted to ensure that there is no bogus or fictitious transactions. So they wanted to track whether there was actual movement of goods or services. Reason? This is one industry where a lot of great transactions happen. Like for a moment, if I have to say, there is a purchase of 100 tons steel, and I have billed for 80 tons steel. There is an inventory for 20 ton steel. Now this 20 ton, I'll say, so this is maintained at site 1, site 2, site 3. Now actually, was there a space to receive 100 ton? Was there a purchase of 80 tons? Was there any physical movement? All this data at a post-mortem analysis, very tough for the department officers. But these registers reveal, was there any genuine transaction? Was there any fictitious transaction? The next important topic, section 35, subsection 2, which talks about a non-registered person called warehouse operator or owner of a godown. There could be a warehouse operator who could be a mere operator or an in charge or owner of a godown. I'll give you a backdrop and then I'll come back to this slide. Let me just go to a whiteboard. Let's take an example of a warehouse operator. I don't know how many of you have done the audit of a warehouse operator. There will be a space which is taken on lease. Now, assuming this is 10 acres. Now, I'm giving you a practical example where you come across this provision to understand the complaints from the GST point of view. Assuming that I have a warehouse which is for 10 acres. Now, what I will do, this I have made into partitions. So this is ground floor, this is first floor, and this is my second floor. This I have made further partitions. That is, this is for client 1, client 2, client 3, client 4, client 5. Example, Amazon, your Flipkart or your eBay, all this. One example. Second example, your trading concern. your trading dealers, where they wanted a space, they wanted a person for loading, unloading, a person to print a document and maintain inventory. Now, this is one of the business model. This is one of the business model which is on a boom these days. Where assuming I'm a Japanese MNC, I'll not name. Let me say I'm a subsidiary of one of the MNC. What I do, I have a brand. Because of brand, customers will buy. So what I do, I import, I store, and then I sell. Now, my main office, say I have main office in, say let's take example of Delhi. In Delhi, there is something at some place called Connaught House, Connaught Palace. Now, Connaught Palace is one of the posh and prominent place. I have, say, 20 by 20 square feet office. Now, this is how the businesses do flourish. For me to coordinate, for me to operate, I have this office called 20 by 20 warehouse, or say main office. I have a warehouse, say this warehouse is say 80 kilometers from my main business. This warehouse is in say this place called C1. I'm the customer. So I use ground floor, I use first floor, I use second floor. So what they do, instead of me owning a premises, instead of me employing a person, instead of me doing the inventory management, I do entire activity as an outsource. So I will be called as this warehouse in charge. I could be a owner or I could be a operator. That means to say, if I have my own land, I can do this warehouse activity. So what if I don't have warehouse? Don't worry, take it on lease. A person who has this 10 acres doesn't know what to do. A person who has a business idea will convert this to a warehouse operator. Now, this is a main business where I get my income. One is renting activity. Second, your business support service. So what is that business support? I provide a manpower. Whenever stock comes, loading, unloading is taken care. Whenever dispatch has to be done, invoice is printed from a printer. And every day I maintain an inventory. I just do what is opening stock, received during the day, issued during a seal invoice, and closing stock. For doing all this, I have something called business support service. So this is main activity. So this particular owner of business warehouse, the set of books of accounts other than your invoices, what is the law expecting? I'll come back to my main screen. So here the law says that you being the owner of a warehouse or a godown, you may be registered, may not be registered. So whenever you're using this place for the purpose of storage, irrespective of whether you're registered or not, please maintain records to indicate who is the consigner and who is the consignee. That means to say, in your warehouse, who has taken this on lease, please indicate the name, indicate the GST number. And when the goods are dispatched from your warehouse, please indicate who is the consignee. That means to whom these goods are being dispatched. Also, the means of details of goods. That is, what goods you are storing and some other details as may be prescribed. That means the lorry, in which vehicle the goods have come, I have unloaded, in which vehicle the goods have been loaded and dispatched. This is the expectation. This is the expectation from this particular line of business. And this gentleman, this particular business, if is not registered, there is a simple form called ENR01. Using a PAN number, I register myself as a operator of warehouse or a godown. So whenever inspection happens under 67, So when an officer comes, I cannot stop the officer saying that, sir, I'm just a warehouse operator. I don't know what is happening. I don't keep a track of my customer. I cannot say. As a warehouse operator, I need to keep a track of who is my consigner, who is my consignee, consignee, and the transport vehicle through which the goods have come, and the description of goods and the inventory of those goods. All these registers have to be maintained as owner of godown or warehouse operator. This is what I have discussed. Now, in addition, the person transporter, even on the transporter, they have put some burden saying that as a transporter, what goods you are transporting, where you are going to give the delivery, where all you are going to store those goods while they're in transit. And please indicate who is the person who gave the goods. Please indicate whom you are going to give a delivery of that. So as a transporter, this is also some basic information which is being expected. This is the ancillary power. Commissioner may, by his power, he'll indicate what additional documents and what records are to be maintained under Rule 56. Last but one the slide of accounts and records. In general, whenever we give a guidance, the common question asks, so what is the period? How long we have to maintain these records? What is the time? How long we have to store this particular registers, right? So if I don't maintain the registers, I have explained, it is deemed that the goods are supplied and my recovery provisions under 73, 74 is going to take place. Now, the time limit to maintain my registers, 72 months, that is 6 years. 72 months from the date of filing of your GST annual return. Due date for furnishing your annual return. What is the annual return? Annual return is a one-time activity in here. It is a one-time activity at the end of the year. Generally, normally, when my financial year is April to March, this 9 months from the end of the financial year, that is December 31st is the last date within which annual return has to be filed. But because GST has been implemented in 2017, every year there was a due date extended beyond December. Only from 21-22, 31st December was sticked on, it didn't got extended. So generally, law says that when I talk about period of retention, 72 months I have to maintain my books of accounts from the due date of furnishing annual return. So for a moment, I'll just take a hypothetical example. If financial year 2017-18, my due date happens to be for annual return happens to be, say, 31st December 2020. If this is the due date, 72 months from here, that is 6 years. So 21, 22, 23, 24, 25, 26, 6 years. Till 31st December 2026, the books of accounts have to be maintained. Now, please keep in mind, audit is one aspect, maintenance of books of accounts is another aspect. For the audit, issuance of an order under section 73, under 74. Again, Vignesh sir is going to cover this particular topic in a while. There is a time limit of 3 years. There is a time limit of 5 years. But however, irrespective of audit under GST law, my responsibility to maintain books of accounts is for a period of 6 years from GST point of view. So what if there is a audit where I have gone for an appeal? So if there is a matter which is pending in appellate authority, that is tribunal, or There is a revision again. Vignesh sir is going to cover this demand and revision. What if there is a revision done by a revisional authority? I have gone for a tribunal or I have gone for a court. If matter is pending by at any of these forums, they say for a period of 1 year, after final disposal. So if the matter is pending before commissioner appeals, this is at appeal stage, or revisional authority, tribunal, or court. Whenever order is passed, please maintain the books of accounts 1 year, completion of 1 year from the date of order. From the date of order. That means to say, if the order is served on 31st December 2023, pertaining to, say, financial year 2017-18. Assuming my books of accounts is getting over on, say, 2023, September, just a hypothetical example. Normal period is ending on, say, 30th October 2023. By this period, my normal period of books of accounts is getting over. If the allegation or if there is any matter which got settled in December 2023, by virtue of this section 35, till 31st December 2024, I have to maintain my books of accounts. This is what we need to understand. Moving on further. Payment of tax. This is a new topic. They expect a 3 marks question from your final. Let me see if there are any questions. Srinivas is asking, sir, there's a topic called e-way bill pending. Srinivas, last 30 minutes of today's discussion, I'm going to cover that e-way bill provisions with respect to penal provisions under e-way bill, right? Apart from that, there are no questions. I believe discussion is going on good and you are able to follow the provisions, whatever I'm explaining. Now, payment of tax under GST law. They have explained that payment of tax happens through various ledgers. There is a ledger number 1 called electronic liability ledger. Electronic liability ledger. Ledger number 2, electronic credit ledger. Electronic credit ledger. Then third ledger called electronic cash ledger. Electronic cash ledger. As the name goes, any liability, that is any tax which is due, any amount of interest because of delayed payment of tax, or any late fee because of delayed filing your statement or return under GST law, or any penalty levied because of non-compliance of any of the provisions. Those cases, the officer is going to update this ledger called electronic liability ledger. The payment of this electronic liability ledger, the payment for electronic liability ledger may happen through credit ledger or cash ledger. These ledgers I'll explain in detail as we sail through in a couple of further slides. In the process of explaining these ledgers, I'll explain you the concept. What do you mean by payment of tax and when interest computation needs to be done under section 50. Please expect 3 marks question from this particular chapter called interest computation under section 50. In 2022, July 2022, there was an amendment to 50 subsection 3. 50 subsection 3, this was a retrospective amendment. Examination, because this is being tested for the first time, please expect a compulsory question for 3 marks from this particular topic. Then, input tax credit, the order of utilization. in the initial days, 2017, 2018, 2019. 2017 to 2019, this is a hot core topic which is tested in your exam. Reason, there was a manual order of utilization. Later, this was automated. So this topic is there as a theory for you to study. What is the chronology? What is the chronology of utilization? I have an input tax credit of IGST, CGST, SGST. So in which fashion I have to use that particular input tax credit? This may be tested only for theory, not from your examination point of view. Moving further, concept of TDS under section 51, concept of TDS under section 52. Expect alternative questions for 3 marks again from this particular topic in your examination. Mutually exclusive, examiner may ask this chapter payment of tax, please expect short 3 marks question. So this 3 marks question may be expected from the topic called interest computation or TDS TCS provisions under section 51 or section 52. These are the coverage which I am going to take you through in today's discussion. Basic definitions, input tax credit under GST law. Though Vignesh sir has explained, I'll explain just to recap your knowledge on this electronic credit ledger. Whenever we talk about input tax credit is your credit ledger. My credit ledger. Now, when I say credit ledger, because we are accountants, I'll make you understand from T account, debit side, credit side. I use this electronic credit ledger where on account of purchases where my supplier is going to charge the GST to me on the forward charge. That gets credited to this electronic credit ledger. Also, on account of imports, import of goods, import of services, my electronic credit ledger shall be updated. What else? On account of reverse charge mechanism for IGST, for CGST, for SGST or UTGST, on account of RCM, my input tax credit ledger shall be updated. So here, the input tax definition says that you can claim input tax credit. On account of supplies from a registered person. Also, on account of import of goods. Also, the tax payable under 9(3), that is your CGST law. Also, tax payable under IGST, state law, or UTGST. But look at the last line. Look at this last line. They say that the tax paid under composition scheme is not permittable for debiting this particular T account. So when you look at this T account, when you remember this T account, composition scheme, tax paid under composition scheme will not get credited into this credit ledger. So when can I get the benefit of this? Section 18, exceptional provision, section 18, where I migrate from composition to regular scheme. That is a point in time my input tax credit ledger shall be updated. Moving further, output tax. As we understood input tax, let me open a T account. If I look at my T account, if I have to say this is my debit side, this is my credit side, output tax. My output tax is created on account of supply. Look at the definition. In relation to a taxable person, what is the reference? What is the importance of the term taxable person? Taxable person means person registered or person liable to be registered under GST law. Who is the person liable to be registered? Person who has exceeded a threshold limit under section 22. Person who has made supplies one of the 12 list of categories under section 24. The person who is liable to register but not registered also can be called as a taxable person. Means the tax chargeable under a tax supply of goods and services made by him, but excludes tax payable on RCM. So they say that your output tax, when I say output tax, this does not include RCM. This does not include RCM. So why this RCM is not brought here? Reason, look at the debit side. I can use my input tax credit for payment of tax on outward supply, but I cannot use my input tax credit. I cannot use my input tax credit for payment of tax of RCM. This is how I understand my definition called output tax. Yeah. Next definition, outward supply. Outward supply is nothing but a taxable person. This is derived from section 7. A taxable person who supply goods or services, whether by sale, transfer, barter, exchange, license, rental, lease, or disposal, or any other mode. We have Navaratnas, Navagrahas. There are 9 modes recognized under section 7. Any of these 9 modes, when you make a supply, in the course or furtherance of business. In the course or furtherance of business. Example, sir, I'm making a transfer. Like example, under CSR activity, I buy 10 laptops and I distribute 10 laptops. So why I have spent CSR activity? In the course of furtherance of business, when I report a profit, under Companies Act, I'm mandated to spend money under CSR activity. So I buy and transfer the goods where I don't sell the goods. Then it is called as a supply. That is called outward supply. So this is the definition for your outward supply. Students, we are at 7:32. Let's have a break for 8 minutes. 7:40, we will resume back, right? Let us continue with our discussion on payment of tax. Now, to start with, payment of tax, when I say, I have explained you this concept of ledgers, that is electronic cash ledger, credit ledger, liability ledger, etc. Right? So here, first point, they're talking about your electronic cash ledger. Electronic cash ledger. So this electronic cash ledger is a ledger where whatever money you deposit, like your bank account. So you go to your bank and put money into your savings account. That money, I can use it for repayment of my housing loan. I can use it for making a fixed deposit. I can use it for payment of any recurring bills, utility bills. So likewise, I have a cash ledger that can be used for what? I can use it for payment of tax, interest, penalty, fees, that is late fee, or any other amount. Example, any other amount, say pre-deposit. When I'm going for an appeal, I have to make the payment of tax called pre-deposit. Appeal under section 107. So I can use my electronic cash ledger. Late fees, I have delayed in filing my return, I have to pay late fee. I have to use my cash ledger. Penalty, whenever there is a department audit and I have contravened any of the provisions, then penalty can happen. So all these are the amounts which can be made by or from cash ledger. So whatever money I'm going to deposit, that comes and sits in cash ledger. This money I can use it for these 5 modes. This 5 modes. Right? Then next is your electronic credit ledger. Electronic credit ledger. So they say that your input tax credit, I have explained you the T account, right? So the money, the credit which you have identified, that is your self-assessed. They say self-assessed. What do you mean by self-assessment? I, suo moto, on my own account, I ascertain the provisions of section 16, provisions of section 17 and 18. That means to say, I have evaluated myself how much I can take the input tax credit. I have evaluated myself, is there any blocking of input tax credit? I also evaluated the provisions of section 18. How much is the input tax credit on inventory or machinery? I can take the input tax credit. So you, on self-assessment basis, you declare how much credit you want to take, and that money gets credited to electronic credit ledger in accordance with the provisions of section 41. Reference to section 41, they say that in case of your default in payment, there is a supply. The supplier has defaulted in payment. There's a provision 16 subsection 2 clause C, where whatever supply is there, that supply, the tax should be paid to the government. So in case if there is a default in payment, I as a recipient, I take the responsibility to reverse. This is a revised provision called section 41. So the law says that in case of input tax credit, law says that self-assessed, you are responsible for input tax credit. And I have explained that my input tax credit available in credit ledger, this amount, I can use it for payment of my output tax. Now, when I say output tax, you have to always remember the definition. Output tax does not include reverse charge mechanism. That for that formula, that particular explanation, my input tax credit cannot be used for payment of RCM. Why? It derives the importance from the term called output tax. My output tax, as per GST law, does not include the tax payable under RCM. This is a keynote which you need to remember. Now, this is one slide which I was saying 2017, 2018, 2019. This is one provision which was tested frequently for the reason this order of utilization is not auto-populated in the GST utilization was semi-automated in the initial days of law. So here, first point is whatever money is there in the cash ledger, these are the 5 modes I can use. And the money in the credit ledger, I can use it for payment of my output tax, CGST, IGST, or SGST. Right? So here, the set off, that is the input tax credit. So this provision explains how I can make the payment of tax. I'll just explain by way of, let me come to a whiteboard and I'll come back to this particular screen once again. Say for a period month 1, my, I'll say description, IGST, CGST, SGST. Say my output tax, I have to pay output tax of 10,000 IGST, say 2,000 CGST, 2,000 SGST. Input tax, I have an input tax credit of say 6,000 IGST, then or I'll say 16,000 IGST, 500 CGST, 500 SGST. So when I talk about payment of tax, now concept says that this payment of tax, whatever ITC is there, that I can use for payment of output tax. Similarly, money available in cash ledger also I can use for payment of tax. Now, question comes here. In case of IGST, my ITC is much higher compared to output tax. In case of CGST, my input tax is much lower compared to my output tax. So here, there is no requirement of cash. Here, there is a requirement of cash. Here also there is a requirement of cash. So this mechanism of adjustment and payment of tax, this is what discussed in section 49, where they say, can IGST be used for payment of IGST? Can it be used for CGST? Can it be used for SGST? Similarly, can CGST be used? Can SGST be used? This is explained in your section 49, right? I'm going to explain that slide in this particular window. So here they say, whatever input tax credit is there on account of IGST, I am permitted to pay for IGST, permitted to pay CGST, permitted to pay SGST. That means to say, the previous example what I've shown you, that 10,000 and 16,000. Whatever surplus IGST is there, that surplus of IGST input tax, I can use it for CGST and SGST. This is a permissible mechanism. So what about CGST? CGST, I can use first for the payment of CGST and balance, I can use it for IGST. But I cannot use for payment of SGST. Similarly, concept of SGST, I can use my SGST first for SGST. Balance, in case any balance is there, I can use it for payment of IGST. But I cannot use it for payment of CGST. I cannot use it for payment of CGST. So what is the funda? What is the principle? I'll explain this funda. Let me come to my white screen. Please remember, IGST, CGST, SGST or UTGST. or UTGST. IGST goes to union, where bifurcation will be done to 50% to the central government, 50% to the respective state or union territory. Central CGST straight away will go to the central government, and SGST will go to the respective state or union territory. Now, central government has their own budget. Similarly, respective state or union territory have their own budget. Central government does not want to part their money with state government. Similarly, state government does not want to part their money with the central government. So, mechanism for knocking off CGST with SGST or SGST with CGST or UTGST with CGST, this is not permitted. However, mechanism of setting off IGST with CGST or mechanism of knocking off CGST with SGST is permitted. Similarly, ulta, whatever balance in CGST, I can knock off for IGST. Similarly, whatever balance is there in SGST, I can knock it off or use for payment of IGST. This is acceptable mechanism. This is the concept explained in your section 49. I call this as order of utilization. Order of utilization. This was being a hot topic tested in your examination till 2019. Coming further. Now, when I am permitted to use central GST or state GST, the law says clearly that, look, first, I was talking about IGST, CGST, SGST. So here, IGST can be used for payment of IGST. CGST, I will use it for payment of CGST. Then balance for IGST. SGST, I'll use it for SGST. Then balance for IGST. Now here, the law says that when you're examining to use this payment of SGST for IGST, the balance in CGST should be nil. Reason, this IGST is a composition which goes to union and states. Generally, it will be primarily authority with the union government. Union government decides how to allocate to the respective states. So here, first priority, they are saying that exhaust CGST. Then only touch UTGST or SGST. This is a policy matter. This is a policy matter. Saying that when you are using input tax credit on account of state tax towards payment of IGST, only when the balance of input tax credit on account of central tax is exhausted. This is what they are trying to say. I repeat once again, whenever you're talking about utilization of UTGST or state GST with IGST, we need to ensure that the balance in central GST should be nil. Only then UTGST or SGST can be used for IGST. So why is that treatment? This is a policy matter decided by the GST Council. Now, so what happens? Your every month, whatever month is there, end of the month, I have shown what is my output tax, what is my input tax credit, what is the balance available in cash. So output tax is 100, input tax is 150, cash is having a balance of 120. Now I have a choice to make this payment of output tax either through ITC or through cash. For a moment, let me assume that I have paid through ITC. 150 minus 100, I have been left with a balance of 50. 120 minus 0, I have not used anything. This is my balance. So, section 49 says, look, at the end of the month, whatever balance is there, apply the principles as per section 54, which talks about refund. So if section 54 permits you to claim what? Claim a refund. This money in electronic credit ledger, money in electronic cash ledger can be taken back. This is the principle explained under section 49. I explain once again. The provisions of section 49 says that every month, please examine what is the tax payable, my output tax. What is the input tax? What is the cash? Pay the respective taxes. Look at your closing balance. Whatever balance is there, look at your provisions under section 44. If provisions under section 44 is permitting you to claim a refund, please take this money back by filing a refund application. This is what we need to understand. Next. Electronic liability ledger. I think I have a picture. I have no picture for this. Let me explain in a simple manner. Now, electronic liability ledger, this, as you know, is indicating what is the money I have to pay, right? So here, always when I talk about this ledger, please visualize your debit and credit. Credit is your payment. Credit is your liability. Debit is your payment. Now, this is in my books. Mirror image of this in GSTN portal. Mirror image of this will be in your GSTN portal, like your bank reconciliation. What is maintained? Debit in your books is credit in your bank books. So when a check is received, I'll say debit my bank account. When the check is cleared for deposit, the money gets credited into my bank account. Please apply the same funda over here. Here they say that the money towards the liability towards tax on your supply, interest towards delay, late fee in default in filing the return in timely manner, any other amount, maybe penalty, whatever these amounts are there, these amounts will be debited to my electronic liability ledger, right? This money may be debited either myself or by a proper officer when there was an audit done under any of the proceedings under GST law. When I file my return, when I file my GSTR 3B, this is called self-assessment. As per self-assessment, whatever tax is due, I can make the payment of tax using electronic credit ledger, or I can make the payment through electronic cash ledger. So these amounts are going to get credited into the GST portal. If you visualize your T account, on the debit side is your payment as per your books that gets credited in the GSTN portal. Now, there's a concept called TDS, section 51, TCS, e-commerce operator, Swiggy, Zomato, Amazon, etc. Right? Similarly, composition scheme under section 10. All these people, they have to use mandatorily. I'll write here, mandatorily. Electronic cash ledger. That means to say, these three people, one is your person registered under TDS section 51, person registered as e-commerce under 52, person registered under section 10 for composition. These three people have to mandatorily pay their taxes in cash. Also, not only that, the law says that, carefully, please observe this, amount towards interest, amount towards penalty, amount towards late fee, or any other amount. One is interest, penalty, fee, or any other amount. That should be paid only through electronic cash ledger. So, if there is a delay in if there is a delay in payment of tax, this delay like I cannot use my credit ledger. I cannot use my credit ledger. I have to pay it through cash. So I have delay filing my return by 3 days. There is something called 50, 100 rupees per day, a late fees. The 300 rupees I have to pay through cash ledger. I cannot use my input tax credit ledger. So this is what the loss is. Penalty. Even a penal provisions, penalty has to be paid only through cash. What I can expect from an examination, 1 mark MCQ. Payment of tax, interest, late fee, penalty. Can I use credit ledger? Can I use cash ledger? That will be tested in your examination. This, whenever there is an order passed by appellate authority or by a tribunal or by a court in favor, then that shall be credited to my electronic liability ledger. Now, order of payment of taxes. Section 49 says, how do you pay your taxes? How to pay taxes. This, I'll give you an example as if, like, no, look at your bank balance. When you have your bank balance, choice is up to you to pay the overdue amount, to pay current loan installment, or to pay your utility bills. So the way you take a decision, in this case, whenever you are making the payment of taxes, they have given a following order. What does that say? A person shall discharge his tax and dues under this act in the following order. First, you will be paying self-assessed tax of previous tax period. Then, second, you will pay self-assessed tax of current tax period. Third, you will pay amount payable under 73, 74, that is demand and recovery provisions. Demand and recovery provisions. I'll explain you in detail this. Let me just come to a wide screen. I'll make you to understand this way. Say month 1, month 2, month 3. I have my GSTR 1. I have GSTR 3B. Say my input tax credit. Say my cash. Let's take this for IGST or any CGST, SGST, whatever be the transaction. Say month 1, I have output tax of 100 rupees. I have paid in GSTR 3B 80 rupees. How this 80 rupees was paid? I have paid 20 rupees through cash. I have paid 60 rupees through cash. Month 2. Say my turnover, my tax, this is all for taxes point of view. Taxes. For month 2, I have paid, my GSTR 1 shows 120 as my output tax. I have paid only 100 in my GSTR 3B. How did I pay 100? I have paid 40 rupees through input tax credit. Again, I have paid 60 rupees through my cash. Month 3. My output tax is, say, 100. My differential tax, 20 rupees. Now, here I call self-assessed tax not paid. Self-assessed tax not paid. In the month 1, 20 rupees is not paid. In month 2, again, 20 rupees is not paid. 20 rupees for month 1, 20 rupees for month 2. In month 3, I am going to pay 140 rupees. From where this 140 has come? 100 for month 3, 40 rupees for month 1, 40 rupees for month 2. And self-assessed tax not paid is going to be nil. Say input tax credit, I have 150. And I have, or instead of 150, I'll make it, say, just give a minute. There's a, yeah. For month 3, my input tax credit, assuming it is for 120 rupees. And my balance payment happened in cash for 20 rupees. Now look at this carefully. In month 3, when I'm using input tax credit, when I'm using my input tax credit, question comes here. This 120 rupees, I have output tax of 100 only. This 140, if I look at, 100 is for current month, 40 is for previous month. Now, when I look at the order under section 49, I can pay self-assessed tax of previous month, self-assessed tax of current month. So what I will do, my self-assessed tax of previous month is 40 rupees. My self-assessed tax for current month is 80 rupees. 120, I have split this way. 40 rupees I am using for month 1, 40 rupees I am using for month 2. Balance 80 rupees, I am using it for month 3. So when I paid 120, balance 20 is there, I have paid through cash account. This is called my order under section 49, order of payment of taxes. So why is this mechanism? Now, I don't have sufficient balance. I have paid erroneously. Whatever be the reasons. This is a mechanism which was permitted under section 49. Let me come back. Let me just see if there are any doubts in this line. Good. There are no doubts. Hope the discussion is going on well and you are following the concepts. No doubts indicates everything is clear. At the same time, everything is not clear. I believe point number 1 is applicable. Coming back. Incidence of tax. Now, this provision says that I presume every person who has paid the tax, on goods or services. What they say, unless the contrary is proved, it is deemed that the burden of such tax has been passed on. The burden of such tax has been passed on to the recipient. What does that mean? Whenever tax is paid, this tax is paid by after collection from recipient. Now this is a deeming provision. Unless the contrary is proved. So why is this important? Now most of you would have heard a term called unjust enrichment. The law says that, look, I don't want to make someone rich, someone fat, someone big, just because they have paid a tax and a refund application is filed. Whenever a refund application is filed, law is insisting and law is very clear. Please prove that incidence of tax has not been passed on. If you can prove that the burden is not passed on, then I presume that you are not going to get enriched and I'm going to give the benefit of that tax to you. This is the principle of section 49. So how do I prove that this enrichment is not made by me? For these cases, we always give a CA certificate. In this certificate, most of these refund provisions under customs and indirect taxation, they ask for a CA certificate. In my balance sheet under current assets, I would show money due or money recoverable from government. This current asset is going to indicate that I have paid the taxes to the government and that money is due for recovery from the government. This is the principle of incidence of tax, which is given under section 49. Now, this slide is referring to a particular provision called PMT 09 a form. This is just a form. I'll give an example. Why this particular provision has come into picture. When I was talking about something called deposit in cash ledger. Deposit in cash ledger. When law was designed under GST law, tax, interest, late fee, penalty, other, IGST, CGST, SGST. Initially, law was designed such a fashion that when I deposited a challan, I had these 5 heads of accounts. Depositing money in tax, depositing money in interest, late fee, penalty, others. There was one instance where accountant has deposited money in IGST head instead of depositing under CGST head. A sum of rupees 5 lakhs due for payment, accountant has deposited money under IGST instead of CGST. And unfortunately, in the initial days of GST, this cash ledger, when I file my return, cash ledger for IGST, CGST, SGST, I should have sufficient balance. So it was not like our ordinary bank account. So when I deposit money in my savings account, I, as an account holder, I can transfer that money from savings account to loan account, transfer from savings account to fixed deposit, savings account to utility bills. That option I had as a savings account. Unfortunately, under GST, that provision was never there till 2019. 2019, this mechanism has come where money from IGST can come to transfer to CGST or to SGST or UTGST. Similarly, money from tax can be transferred to interest to penalty late fee or late fee to other. Till 2019, it was a miserable position for the taxpayer, where if I have wrongly paid money in IGST account, file a refund application, get that money back into bank account, again deposit money into CGST account. Now, what if the due date is over? You are burdened with a late fee. You are burdened with the interest. Law never acknowledged it is your mistake. So this difficulty was removed by making an amendment to this section 49, where they made a provision to transfer from one head to another head. Whatever I have discussed, I'm just skipping, students. Don't worry, whatever I have covered, I'm just passing through the slides. Now, credit ledger, as I was telling you, in GST portal, if I look at electronic credit ledger, that is input tax credit, benefit of input tax credit, debit balance in my books, credit balance in my books. So when you claim input tax credit, my credit ledger will be credited. If I file a refund application and my refund is rejected, that money gets credited. If I have filed for a refund and again, if I have wrongly paid some tax and that was returned back, again gets credited. My debit happens in credit ledger towards payment of output tax. Or when I file a refund application, whatever money is there, that gets debited from my electronic credit ledger. Just pictorial way. Whatever English is there in your institute material, I made it simple for you to understand. I would recommend, this is not that important, but for you to understand technically, I have made this picture. Now, this is an amendment which has come in the year 2020, financial year 2020. This is a mechanism where my money available in electronic credit ledger, there could be a conditions attached. That means my credit ledger can be blocked. Blocking or restriction. Blocking or restriction. That means to say, the money available in my bank account, I cannot use it for overseas payment unless I have RBI permission. So I cannot use for a specific purpose without a prior approval. Similarly, the government felt, let me put a condition for what? For your electronic credit ledger. For what? If you have claimed input tax credit, if you have claimed your input tax credit, how did you claim? By means of fraud, or you have claimed the input tax credit which is ineligible to you. So how does this happen? The commissioner or any other person who has a reason to believe that this is a doubt on in case of a registered person. In those cases, they can restrict the input tax credit in your credit ledger. So they are saying that the input tax credit has been availed. How? By way of a supply from a registered person. There is a registered person who is not existing or who is not conducting business, who supplied the goods. Like example, I have purchased goods from a supplier who never existed in physical. On paper, he is existing, but in reality, he was not existing. By virtue of, say, some inspection, search, read, etc., they got to know that your supplier is not an existing fellow. That point in time, my credit ledger could be blocked. Similarly, when the officer believes that you are claiming an input tax credit without actual receipt of goods. Section 16, subsection 2, where you have conditions laid out, you should have received the goods or services. So officer has a knowledge to understand you have not received the goods. Then they can block your input tax credit. Then the supplier who has charged that supply has not paid the tax to the government. When the supplier has defaulted, then also my input tax credit can be blocked. Or I have claimed input tax credit, but I am not in existence. That means I am not carrying on my business. What happened? I have taken huge input tax credit and I have not been doing any business. When there was a inspection carried out by an officer, my business premises was not functioning. Then the officer has a reason to believe that let me block his input tax credit because I feel something is wrong with this particular registered person. Similarly, when the registered person is not in a position of input tax credit paying document, whatever document on which you claim input tax credit, this document is not there when the audit is being conducted. So here, the commissioner will pass an order saying that, look, so much of input tax credit, they're going to quantify the ITC, which is blocked. So what happens if the ITC is blocked? The audit mechanism will be carried out and they come to a conclusion. How much is the input tax credit? You need to reverse. So what happens if they don't take an action? They have passed an order to block the input tax credit, but they have not concluded anything. Then automatically after a period of 1 year, whatever the order was passed, it gets vacated. That means to say, commissioner or an officer cannot be having a holiday period. They have blocked my credit and more than 1 year, they didn't do anything. They were not able to prove any of the above allegations. Then automatically the blocking gets vacated. That is what this law says. Next, electronic cash ledger. This I have discussed. Now moving on to the important aspect called delay in payment of tax. I will explain this very, very simple fashion. Section 50, delay in payment of tax. Now, law says that let it be a compensation to revenue. Compensation to revenue when there is a delay of payment by the register person. Now, because there is a due date, and you have filed your return and paid your tax belatedly. Now, this is a basic funda which is there in every taxation, be it your income tax, be it your indirect taxation, right? Now, the peculiarity of the indirect taxation, that too GST, how we apply this provisions of section 50. I'll give an example to make you understand this. Say for the particular month, my output tax, my input tax, my cash. Say due date, actual filing. And I'll also mention something called delay. Instead of month 1, let me say scenario 1. Scenario 1. My output tax is, say, 100 rupees. This 100 rupees, how did I pay it? I have paid 60 rupees through input tax credit, 40 rupees through cash. My due date is, say, 20th January. I filed on 25th January. So there is a delay of 4 days. 21, 22, 23, 21, 22, 23, 24, 25. On the 4th day, I made the payment. Scenario number 2. My output tax is, say, 120. My input tax credit is 0. My cash payment is 120. My due date is, say, 20th December, but I made the payment on, say, 25th December. Both the case, I'll just take 4 days. Now here, question comes here, question number 1. Was there any delay? Answer is yes. Yes, sir, there is a delay. Should the revenue get compensated? Answer is yes. Now, the interest portion, scenario 1, scenario 2. So interest portion, when I have to pay, the argument is, should I pay interest on 100 rupees, scenario 1, 120 in scenario 2. Now, when I say 100 rupees, this 100 rupees is paid in cash, in credit. How is that? Out of 100, 40 rupees was paid in cash, 60 rupees was paid through credit, and 120 entire amount was paid through cash. Now here, the argument came to say, sir, I'm paying in cash 40 rupees. I'm paying through credit 60 rupees. Please don't demand interest on 60 rupees. Why is that? The 60 rupees is on my purchase. This 60 rupees is on my purchase. That means my supplier has already paid this tax to you. What I'm paying to you is on value addition. When I have to pay 100 rupees, 40% is my value addition. That means 40 rupees I'm paying to you in cash. 60% is already on my purchases, on which my supplier has already paid the tax. So this was an argument. Even the government felt this is a valid point. The assessee has defaulted. Look at the due dates. Instead of paying the tax on 20th January, why I have paid on 25th January? Sir, I raised a bill. I don't have cash of 40. I was waiting for my customer to make the payment. When my customer made the payment on 25th January, immediately I filed my return to pay the tax. This argument was accepted, where section 50 says that whenever there is a delay that is beyond the due date, please pay the interest only on cash portion. Only on cash portion. Now, having said that, there was a condition. There was a terms and conditions. What is the terms and conditions? Look, I'm not going to allow you this benefit all occasions. I'll allow you this benefit only when you have filed suo motu on your basis. Not when there is a proceedings initiated under section 73 or 74. This is your chapter of demand and recovery. That means don't wake up when a show cause notice is given to you saying that you have to file a return but not file. My notice proceedings can initiate under 73 or under 74. So in case the proceedings are initiated under 73 and 74, after that you are filing your return, then on entire output tax you have to pay interest. I repeat, if you are filing your return under section 50, if you're filing your return after the proceedings are initiated under 73, 74, interest is payable on entire output tax. I am not bothered how much is your input tax credit. Reason? You should have filed your return much prior to initiating proceedings under 73, 74. This is what section 50, subsection 1 talks about. Section 50, subsection 1 talks how you have to pay tax under section 50. Let me know you have any doubts before I go in this regard. So far, so good. No doubts. I'll go further. Now, I was indicating to you earlier, there was an amendment made in Finance Act 2022, 50 subsection 3, right? This subsection 3 was made, notified retrospectively from 1st July 2017. And by virtue of this Finance Act 2022, notification dated 5th July 2022. So your November 2022 would have not seen this this question. Reason, when you have taken up your exam in November 2022, all your amendments till April 2022 would have been tested. This May 2023 attempt, this is going to be one of the mandatory question which will be tested, right? I'll explain you the provision, I'll explain you the problem, then we will come back, we'll go further in our discussion. 50 subsection 3. Law says that, look, occasions where input tax credit has been availed. This input tax credit has been wrongly availed. So when I say wrongly availed, what could be the example? Sir, I have a bill for 120. While accounting, my accountant has accounted for 150. I have a purchase of input tax of IGST for 100 rupees, but I have accounted as CGST and SGST 100. Now, all these are clerical mistakes which generally happens. So the law says that wherever you have availed input tax credit, also look at the term end. You have utilized the input tax credit. Then registered person shall pay interest on such input tax credit wrongly availed and utilized. Now the law says that I'm going to recover. What is that? Recover the tax not paid. I'm going to recover the tax not paid. That means, look at this scenario. This is actual. This is what reported in your return. 120 you have to claim, but how much you have claimed? 150. You have claimed excess credit of 30 rupees. So the loss is that I'm going to recover this 30 rupees maybe under the provisions of section 73 or 74. However, I'm also going to recover interest under section 50. How? Only when you have utilized this 30 rupees. At a rate not exceeding 24%. At a rate not exceeding 20%. And this was notified effective from 1st July 2017. Now, what I will do, I'll come to a whiteboard and then explain this provision, how this rule has been brought in. ITC, availed and utilized. Now, let me take example of month 1. Let me, just for simplicity, I'll just take only IGST ledger, Let me say actual, reported, when I say actual, this is availed. Let me also have opening balance, utilized, closing balance, and conclusion. Instead of month 1, I'll just say, yeah, this is my period. Say month 1, I have an opening balance of 120 rupees. Actually, I should have taken a credit for that month, 30 rupees. Please follow carefully. Month 1, I have an opening balance of 120 rupees. My actual credit to take is 30 rupees. But while reporting my GST 3B, I reported 140. And I have utilized 40 rupees. My closing balance happens to be 120 plus 30, 150, minus 40, 90 happens to be my closing balance. And here I will say this difference, that is difference between actual and reported. So here I have 10 rupees which was wrongly availed. Month 2. My opening balance happens to be 90. Actual credit is say 50, but I have reported 120. Now, how much is the gap? 50 and 20, 70 is the gap. Utilization, say 90 plus 120, 210. Say I have utilized entire 210. And closing balance happens to be like 90 opening balance. In GST 3B, I have taken 120. 90 plus 120 happens to be 210. I have used entire 210. Closing balance happens to be 0. Right? Month 3. Opening balance is nil. Actual 120. Reported, say 80. Utilized, say 80. Difference, I have nothing in that month. Closing balance happened to be 120 minus 80, 40. So here, loss is that in month 1, have you wrongly availed input tax credit? Answer is yes. Yes, I have taken wrongly input tax credit. Question comes, have you utilized? Answer is, sir, I assuming for a moment this 10 rupees is not there. My closing balance 80 is there, which is much, much higher than the wrong availment. So here, conclusion happens to be wrongly availed, but not utilized. I repeat, my input tax credit has been wrongly availed. How much was wrongly availed? 10 rupees. Was that utilized? It was not utilized. Why is it not utilized? My closing balance is much, much higher compared to the mistake I have done. Should I need to pay interest? Answer is no interest. Moving to month number 2. In month 2, I had an opening balance of 90. I have availment of 50. 90 plus 50, 140. Reported 120. Now, this 120 I have reported instead of 50, 120. So there is an excess reporting of 70 rupees. How much was utilized? 210. Do I have any closing balance? I don't have any closing balance. How much was excess utilized? 70 rupees for month 1, 10 rupees pertaining to month 2. Now, since closing balance is not there, 70 plus 10, 80 happens to be a wrong availment. Was that utilized? Answer is yes. Wrongly availed and utilized. Wrongly availed and utilized. Should I need to pay interest? Answer is yes. Interest to be paid. Interest to be paid. Interest to be paid. On what amount you have to pay interest? 70 rupees for the current month and 10 rupees pertaining to the previous month. 80 rupees I have to pay interest. When I travel to month number 3, in month number 3, I have 120 actual. I actually reported 80, utilized only 80. How much is the closing balance in electronic credit ledger? Since I have reported only 80, my electronic credit ledger gets updated only for 80. There is no balance in electronic credit ledger. This closing balance is only in books. If this 40 is there only in books, so why is this not coming to electronic credit ledger? Maybe section 16, subsection 2, clause B. I have not received the goods for 40 rupees. That's why I have not claimed this 40 rupees in my GST 3B. So when I travel to month 3, interest is payable on this 10 plus 70, entire 80. Even in month 3, interest has to be paid. Interest to be paid. So this is how I calculate month on month ITC wrongly availed and utilized. Hope this is clear. Let me know if you have any doubts. Examination students, again I'm telling you, 3 marks, please expect a question from this new amended provision. Kaushik is asking this question. If reported is less than actual ITC. When I say reported, Kaushiki, what I have shown in my GST RDB? What amount is there in my credit ledger? So here, instead of reporting 120, I have reported only 80 rupees. Instead of reporting 120, I have reported only 80 rupees. Correct? So here, that 40 rupees because of section 16, I didn't report it. I'm not eligible to credit my credit ledger. So there, what was credited to credit ledger, only that gets counted, not as per your books. And in this case, I have to pay interest on the entire excess availment, which was not settled off, or I don't have a sufficient balance. Great. Other than this, there are no other doubts. Let me come back to my presentation. Now, quickly, we are at 8:40. We have this e-way bill also to be covered. I'll quickly cover this TDS and TCS. TDS, this is a concept where the government wants to recover or report. Government wants to report the supplies to central government, state government, or local authority. I'll give you the backdrop why this concept of TDS has come into picture. Generally, this central government, state government, local authority, they are not registered. They are not registered under GST law. And when they are not registered, they are not bothered about ITC. No concern on ITC, right? So whether the supplier has paid the tax, not paid the tax, they are not at all bothered. So all these civil works, generally the civil contract works, construction of school building, road, or your municipal water treatment plant, lot of things. Those get unnoticed. Like your income tax, TDS under GST was also brought in to catch hold of those transactions where they have said a central government or establishment or a department like DRDO or your IRCTC, local authority like your panchayat or municipality, government agencies like your development, like your Rajasthan Development Authority or Bangalore Development Authority, or notified persons under a particular notification. Government has identified these authorities and they say, whenever you receive taxable goods or services, that means your supplier is charging GST. Your supplier is charging GST and the value of that supply is exceeding rupees 2.5 lakh, not including taxes. Then please deduct something called 2% TDS. So they say any supply under a contract whose value is exceeding rupees 2,50,000, these four authorities were nominated to withhold 1% SGST, 1% CGST, or 2% IGST. This is your intrastate. This is your interstate. So please deduct this TDS and report using a particular form. Now, one of the peculiarity of this particular TDS is if service provider or supplier and place of supply, if these two are in a particular state or union territory, which is other than recipient, then there is no TDS to be deducted. I'll give an example. Let's take example of this entry. Service provider is in state A, place of supply is in state A, recipient is in state B. I'll give an example of this. So there is a works contract. There's a works contract called, let me say, there is a road to be laid. And this road to be laid is a contract awarded by New Delhi. Road to be developed by New Delhi. When there is a survey being done, service provider is from Haryana, and this survey is being done on a land in the state of Haryana. Now, place of supply provisions, section 12, subsection 3, in relation to immobile property, service provider who is doing a survey is in Haryana, land, immobile properties is also in Haryana. Then SGST, CGST of Haryana will be levied. Now, where is the local authority? This local authority is in a union territory called New Delhi. So this New Delhi authority can never recover CGST, SGST and report to that state of Haryana. So for that reason, this TDS, when it is being deducted, if service provider and place of supply are not in the same state of a recipient, no TDS under 51 can be deducted. TCS. I'm just quickly running because I have to cover this section 129 e-way bill related provisions. I'll explain the concepts, don't worry. E-commerce operator. E-commerce operator is a person who has a platform where the trade happens on the platform using that as a modem. The e-commerce operator, he collects money for supply by a registered person. Take example of your Amazon or Flipkart. Say there is a service provider, e-commerce operator, seller 1, buyer 1. Seller 1 is in the state of Haryana. Buyer is in the state of, say, Uttar Pradesh. E-commerce operator, he has got this electronic commerce platform where he lists the products of seller. When buyer makes the order through e-commerce operator. That order goes to the seller. Buyer makes the payment to e-commerce operator. E-commerce operator ensures that the delivery happened from the seller to the buyer, and later the payment gets released to the seller. So here, wherever there is a taxable supply, the provision says that in case of intrastate, 0.5 should be deducted as TCS. In case of interstate supply, 1% should be deducted as TCS. I repeat, on a taxable supply, a TCS shall be deducted at the rate of 0.5% in case of intrastate, 1% in case of interstate. This is the provision. And generally, 10 days is a time limit from the end of the month where the tax needs to be paid by the e-commerce operator, and a form called GSTR 8 has to be filed. And this money, TCS, this seller, whoever is there, his electronic cash ledger shall have this entry for the TCS deducted by the e-commerce operator. So as a registered person, when I log into my portal, there's an entry called TDS, TCS. I click on that TCS. I can see that these are the supplies made by me through this e-commerce operator. I just need to say yes or no. The moment I say yes and submit, whatever TCS was deducted, it comes in, it's in my cash ledger. These are the provisions connected with my TCS. Let me know you have any doubts on TDS, TCS provisions before I touch upon my this UA bill, e-way bill related provisions. Okay. Kaushik is asking, I think Kaushik, you're asking about that case month 3 where I've reported 120, 80 rupees. I believe your doubt is that point, Kaushik. Let me explain that. I'll just come to a whiteboard. See, I was talking about actual reported utilized gap and conclusion. Now, in a particular month, say a particular month, my actual credit as per books is 120. I have reported 80 rupees. When I say I have reported this in GSTR 3B. The moment I report 80 rupees, Kaushiki, this gets credited to electronic credit ledger. Electronic credit ledger. Now you may ask, so 120 is there. 120 is appearing in GSTR 2B. That means all my suppliers have said, I have supplied goods worth 120 or ITC worth 120 to this particular gentleman. But only 80 was taken in GSTR 3B. What could be the reason? The reason is section 16, subsection 2, I should have received the document. I should have received the goods and services. Now, this is the prima facie conditions for me to claim the input tax credit. For a moment, I assume that 40 rupees is goods in transit. That means I have not received those particular goods. Then utilization, because 80 rupees is there, I can utilize to the extent of 80 rupees. If I have reported 80, if I have claimed 80, there's no gap for section 50, subsection 3, availed and utilized. This is a concept I was explaining you. Where actually is 120, I reported 80 rupees in my GSTR 3B. Let me know, Kaushiki, if you have further doubts in this regard. Great. Now, I am concluding this chapter called Payment of Taxes. From there, continuation to our previous class, e-way bill related provisions. This was one provision I have left out in my previous class. I'll give you the backdrop before I come to this section 129. Why this provision? What reasons this provision has come into picture? All of you are aware, whenever there is a movement of goods through a conveyance, through a motorized conveyance, and value of consignment exceeds, say 50,000, which includes taxes, then e-way bill is compulsory. E-way bill is compulsory. Now, when I talk about e-way bill, Rule 138 has some list of goods where e-way bill is not required. List of goods where e-way bill is not required. Barring that list, what if there is a goods in transit? Goods in transit, where either tax invoice is not there, or delivery challan is not there, or the goods as per bill versus the goods physical available are not matching. Now, these are the provisions, these are the circumstances. I would say these are the circumstances where provisions of section 129 will be triggered. Provisions of section 129 shall be triggered. Now, this 129 is a e-way bill related contravention which explains what the officer can do in case of this particular transaction. I'll come back to my section 129 where law clearly says that where any person, now look at the term any person. Now, when I say any person, I can call as seller, buyer, transporter. Now, seller, buyer generally will be the taking responsibility. Transporter comes into picture where there is a mens rea, that is fraud or willful misstatement or suppression. I call this as a mens rea. Mens rea is a state of mind where there is an intention to evade payment of tax. Seller has boarded the goods to a vehicle. Seller says, I will not give you a bill. There is a risk involved. Without the knowledge of a check post, you need to reach the particular point and then deliver the goods. That's the third case I'm talking when I say any person transporter. Where any person transports, look at the term, transports any goods or stores any goods. Now, transportation, when there is a movement. In the course of movement, I can also store the goods temporarily, maybe for various reasons. That is, moving goods from one place to another place, or when there is a strike or hartal or some riots going on. When they are in transit, and this transportation is being done in contravention of the GST law. When I say contravention, the bill description, whatever it is, it's not matching. Then the goods along with conveyance. Look at the language. The goods along with conveyance, which are used as a means for transporting, shall be liable for detention. So the law says that whenever you're carrying goods which is in contravention of the GST law, along with the goods, the vehicle will be liable for detention. And the law says that I can release the goods. How? When penalty is payable. There are two circumstances. Whatever goods are withheld, These goods could be exempted or these goods could be taxable. The goods could be exempted or the goods could be taxable. Exempted goods example, the oil cake. The oil cake. You might have seen this groundnuts or this particular, there are some fruits where oil is extracted. When I extract oil from those nuts or pulses, then I'll be left with a cake sort of thing, which is called as a de-oil cake. When I transport this de-oil cake, e-way bill is compulsory. So in case of exempted goods, where the owner comes forward, when the owner comes forward, the penalty is 2% of the value of goods or 25,000, whichever is lower. This is very simple. Law says that 2% of the value of goods or 25, whichever is lower. So what if the goods are taxable? What if the goods are taxable? Then the penalty is 200% of the tax payable on such goods. So if the tax is rupees, say 2.5 lakh, then my penalty will be 5 lakhs. 2.5 lakhs into 2.5 lakhs into 2 times. 2.5 lakhs into 2 times. Then 5 lakhs is going to be the penalty. Very, very stringent and harsh provisions. Now, so what if no person is coming forward? It's a clear-cut case of your fraud, willful misstatement, or suppression, where mens rea is existing. Again, first, exempted goods. Second, taxable goods. So the law says that from 2%, I'll enhance to 5%. However, maximum ceiling, I'm going to park at 25,000. Law says that in case of exempted goods, like example that de-oil cake, either 5% of the value of the goods or 25,000, whichever is lower, please pay the penalty. In case of taxable goods, higher of 50% of the value of goods or 200% of tax. So if I presume that value of the goods is 1 lakh, tax happens to be 18,000. Tax happens to be 18,000. So the penalty here will be higher of 50% of the value of the goods. 1 lakh into 50%, 50,000. Or 200% of the tax. 18,000 into 2%, 2 times, 36,000. So by, I'll say 50,000 or 36,000. Since 50,000 is higher, my penalty happens to be 50,000. So this penalty, unless paid, the vehicle and goods shall not be released. Vehicle and goods shall not be released. Now here, law says that you have a choice either to pay that money or execute a guarantee, security. Security is like your bank guarantee. So you don't pay the money, you execute a security and get the consignment released. In the process of this, MVO 06 is show cause notice will be given, MVO 07, order will be passed in MVO 07. And the principles of natural justice, generally before leaving this particular demand, opportunity will be given and then the order will be passed. As per the law, 15 days is the time within which you have to make the payment of this penalty. So what if I don't pay the penalty? Then this goods will be confiscated and provisions of section 130, that is your auction for making good of the tax along with penalty, will be undertaken. And this vehicle, unless the payment of 1 lakh is paid, the vehicle will not be released for consignment. These are the provisions connected with e-way bill. Next, general rule 138A, documents and devices to be carried. So whenever you're talking about e-way bill, please carry an invoice or bill of supply or a delivery challan. Taxable goods, invoice. Exempted goods, bill of supply. So I'm not making a supply, then a delivery challan. In addition to these two, copy of e-way bill is required in physical form. E-way bill number in electronic form is also okay. So what happens if I have raised an invoice through e-invoice? So if you're making an invoice, that is e-invoice is generated through IRP, then this IRN is going to have e-way bill number. Your electronic copy is good enough. Electronic document is good enough. This is what Rule 138 talks about. So in case of imports, my e-way bill along with import bill of entry is required. Next, Rule 138B talks about your verification. Now this gives a power for inspection. There is something called interception. Intercept, I stop the vehicle. Intercept, I stop the vehicle. I ask for the basic documents. Do you have a tax invoice? Do you have a delivery challan? Do you have a bill of entry? So, bill of supply. Along with this, do you have an e-way bill? If these are okay, I don't do anything. Still have a doubt, then I will undertake an inspection. What I do in inspection, I do a verification. I wanted to see the description as per invoice and the actual goods. Are they both one and the same? If both are one and the same, I will not do anything. If there is any contravention, provisions of section 129 will be invoked. This is your verification of goods. Inspection and verification. Whenever that inspection and verification is done, that will be reported through a form called e-way bill 03. This is just a procedural aspect. Now, important aspect called, this is the last slide, students. I will wind up in another 1 minute. Blocking of e-way bill. This is called blocking of e-way bill. Why is this? If I'm a registered person under composition for goods, if I'm a registered service provider for composition, and I have not filed my GST CMPA for 2 quarters. Continuously for 2 quarters, I have not filed my CMP 08. That is, I didn't pay the tax. Then e-way bill will not be permitted for generation either by consignor, consignee, or transporter, or courier, or e-commerce operator. That means to say, none of these people, consignor, seller, consignee, buyer, transporter, who happens to be the bailey, courier, again bailey, e-commerce operator, who is a middleman. None of these people will be in a position to prepare e-way bill in case of a composition dealer. In case of other person other than composition, who has defaulted for making payment of tax for consecutively for 2 tax periods. So for month 1 and month 2, continuously I have not filed my GST at 3B. Then e-way bill is restricted for generation. So what happens if I have made good of this e-way bill? Then I have to file implication. What happens if e-way bill is not generated? Now this says that input tax credit may be questioned. Movement of goods may be questioned. Without e-way bill, my movement will not be entertained. Also, proof for availment of input tax credit when e-way bill is not there may be one of the reasons which could be tested. So whenever there is a blocking of e-way bill, I have to make an application in this particular form called EOB05. If the commissioner or any other officer is satisfied, they may accept for unblocking my e-way bill related provision. So with this, we come to the end of today's discussion. Let me just quickly see if there are any doubts. Interest on 1070 will be charged until paid. Yeah. Yes, Kaushiki. The example, whatever we have discussed, for that excess availment of input tax credit, month 1, 10 rupees, month 2, 70 rupees. Till my credit balance comes to the level of 80, or I make the payment of this 80 rupees to the government, my interest shall be calculated. Answer is yes. So with this, friends, we end today's discussion. We'll meet back again in customs related provisions. Till then, Good night. Goodbye.